Hello and good morning, everyone. Welcome back to Almus Market Mornings, your daily dose of global financial updates with me, Swaraj. Chinese banks followed the central bank by lowering their benchmark lending rates. Banks reduced their 1 year and 5 year loan prime rates by 10 basis each. Of course, China is currently going through a different situation altogether compared to the rest of the world, which is living in a situation of high interest rates. The Bank of England will be in limelight this week as they announce their policy rate decision tomorrow. Remember, they are suffering from high inflation and labor tightness, much more severe than other regions. Good morning, JK. Take us through these developments. Do you think the Bank of England can raise rates more than the expected 25 basis?
Good morning, Swaraj. Yes, I think so. They can because the the overall inflation number is higher in UK than most of the other countries, and uh, so the target rate is now anywhere between 5.5 to 6%, which is much more than 1% of the current rate, and there is no point in going in small steps of 0.25 unless the bank is the central bank is convinced that inflation is going to fall much steeper in the coming months. We will have evidence of that when the numbers, the latest inflation numbers are released on Thursday, just ahead of the UK MPC decision will be out. So probably, I think it may be a last minute call by the Bank of England whether to go with the 0.5 or 0.25. But in my view, I think 0.5 may be the outcome. On staying on monetary policy, I think China lowered their medium term lending rate today again by 10 basis points, and this reduction was less than what the market was expecting, and more importantly, no announcement of the stimulus from Chinese government so far, and this has led to some sort of risk aversion in the market. Markets are selling off mildly in the Asian zone, barring Australian market, which is up because of miners rally. Otherwise, most of the markets are down. I think we China's growth concerns are still ruling on the minds of the investors. And that is a big factor to be kept in mind in the global investor portfolio. Also, Blinken's visit to China yesterday did not really give any positive outcome, and I think both parties have stood their ground, although expressing that their relations have to be strengthened. I mean, that's only a theoretical statement. But in actual fact, I think the main stand on Taiwan, I think neither US nor China has expressed any change in their respective stands. So the geopolitical factor also is something that's keeping the Chinese markets on the slight edge. And Chinese one, I think fixing was again much higher compared to yesterday, close to 7.16 versus 7.12 yesterday. And following that, most of the Asian currencies have been weaker, and we are seeing IDR, Korean won, Taiwanese dollar, all of them, posting some weakness. Could be some sort of a mild profit taking on the dollar shorts established in the recent weeks. But definitely, the market in the Asian time is not same as what we observed on Friday, which was full risk on. In fact, dollar yen has also come off after some statements from the Japanese officials watching FX market closely, etc., and also mild downward tick in the uh, yields as well. Now, not surprisingly, we had a dull day of trading in INR yesterday. The pair staying at crucial support. Central bank seems to be intent on reining in further strength, and general reluctance on the part of trading community to position either way significantly has led to a very, very tight range market yesterday. US holiday only added to the inaction, although Asian currency cues were negative. Led by Korean won, which fell 0.8%. We had most of the peers on the weakening side yesterday as well. And Chinese won as again weakened at 7.18 today. Now, inability of the pair to break 8190 can lead to some short covering in the coming sessions in line with the peer currencies. However, we are hearing good inflows in the pipeline of corporate fundraising, and hence the upside progress will find strong resistance at 80 to 20. Risk assets have been, even in the absence of US, there have been good movement, but this time on the downside in the risk asset. Most of the European markets were down 1%, but the global composite index of stocks was also down 1%. And I think most of the markets are looking at the rise in official rates by major central banks. Eurozone officials reiterated their stand that July will see another hike, although in September it will be data dependent. UK, as we mentioned earlier itself, is definitely hiking rate this Thursday and perhaps by 0.5%. So these are keeping the markets quiet. Added to that, China rate cut was much lower than expected. And so after the big moves that we had seen in the end process, some profit taking was also evident, which led to Euro and GBP closing, are seeing some slippage. On the event side of the week, we are closely watching the US congressional testimony scheduled to be given by Federal Reserve Chair. Although the text of the testimony has already been released and contains nothing new, we will look forward to the Q&A session where something different can emerge. On the events, apart from the central bank meetings of Switzerland, UK, and Norway, in fact, Indonesia as well, we have the UK inflation and retail numbers, retail sales numbers, US housing market data, Japanese industrial production, and a whole host of Fed speakers lined up during the week. Now that the blackout period is over, I think we are looking forward to what the Fed members individually think about the monetary policy going forward. Friday, we'll see the flash reading on manufacturing and services PMI of major countries, and we need to see how the economies are holding up in the wake of huge rate rises. So all said and done, Tuesday is starting with a much better activity level, although it's not on the so much on the positive side of the risk. So let's see how the things pan out for the rest of the week.
Thank you, JK, and I'm sure it will be a very busy week for you given the host of data points that are going to be released as well as the central bank meetings. Just to quickly summarize, Bank of England can remain hawkish as inflation continues to be higher in the UK than other regions. China's growth concerns are still playing out. Even on the geopolitical front, Blinken's visit to China did not yield much. Chinese market remain somewhat on the edge, and even we are seeing some depreciative moves in Chinese yuan. While domestically for INR, it was a dull trading day as it remains in a tight range due to US holiday yesterday. Good inflows, however, are in the pipeline, so the pair can be well resistant on the higher side. That's it from us today. Thank you so much for listening.